Hi and welcome to the Market Alert for Thursday the 10th of March 2022. So bonds, bullion, black gold dumped as hope hammered hedges squeeze stocks higher. And what they mean by this is that ceasefire they talked about yesterday, complete and utter BS, as nothing came of it, but it allowed them to move stocks back to the upside, which I'd spoken about 2 days ago, that we needed to take out the lower highs that we've been making. As it said here, well, that escalated quickly. Yeah, it'll soon be the return of the status quo to the downside as well. We've got inflation out today, which we'll look at in just a moment. White House expects a high headline in tomorrow's CPI print. That's today, because Putin, yeah, exactly. So they've got an excuse now, even though that the war didn't start until after these figures would have been compiled. But now they can blame Putin for the hyperinflation. Brace for high oil prices, inflation and economic slowdown. It seems that like everything is going wrong at the same time. Absolutely. The last couple of days have just been a reprieve. It's a bit like the lockdowns, and then we're released and then we're locked down again, and you get this sort of optimism with fear and it just to play with people's minds. JP Morgan bails out Chinese nickel giant facing billions in losses from record margin call. This is a very interesting headline, because that means that if JP Morgan are bailing out the nickel giant, then they had obviously some interest in it that would have been systemic, and they've obviously come in and decided the best thing to do is, look, let's pay the bill before this thing gets out of hand. So that's not what it appears to be. This is not going to be any philanthropy on Jamie Dimon's part, that's for sure, or any charitable donation. There's going to be a reason why this was actually paid by JP Morgan. Well, you have to look at the silver manipulation to see that, don't you? Markets are now more vulnerable to systemic stress on a scale not seen since the global financial crisis. Absolutely they are. Daily moves of 10 basis points in key developed market bond yields and swings of 1% in G10 currencies aren't going away anytime soon. No, they're going to get worse as we go forward. And the big news today is this, obviously, the CPI numbers. They're due out today. They're likely to be higher, irrespective of the conflict with Russia and the Ukraine, because, like I say, these would have already been factored in. It's next month that you're going to have to get your popcorn and a nice comfortable seat. But this month they should come out certainly above, it says 0.8, they'll be 9% or more. Might even go into double digits, who knows? So let's have a look at the markets for yesterday. Let's start off with the Dow. I'll just find it for you. And if we look at the daily chart for the Dow, we had a straight reversal yesterday. Market's not looking so bright overnight, and certainly not much buying yesterday either. It was just a case of being able to move the market back to the upside. So we've got the classic dead cat bounce at the moment, and even if they manage to move the market up a bit higher, let me just remove this and add these in. It's not going far, because as soon as the next bullet's fired in the Ukraine, if at all they stopped, then it'll be a case of let's continue moving the market to the downside. So 62 is actually the high of yesterday as well, which is interesting that the market traded to this level. In the 30-minute chart, you can see all of the heavy lifting was done in the pre-market, and then when the market opened at 2:30 for the cash, the market continued this move to the upside. Big move this is. Let's just have a quick look, see where we are from the overnight low of yesterday up to the high, which is going to be this one. We can see that we had 950 points move yesterday in the Dow, so massive move, nearly 1,000 points to bring the market back from the overnight at 1:30, about midnight on Tuesday, and then all the way through from Wednesday. So nearly 1,000 points up on the Dow, in an effort to make it look like everything is fine. It's just incredible, isn't it? The smoke and mirrors that they keep playing with. But there you go. Have a look at a weekly chart for the Dow, bouncing off that 89% retracement again. Meanwhile, in the DAX, this looks interesting as well. As soon as I can find it. And here we go. So we've got yesterday's move. We'll have a look at the point move as well in a moment. We traded up to 62% retracement. We drew these in yesterday. We could get a bit of a run up to the 62% retracement and when the futures open this morning, but watch yesterday's high if this happens. Let's just go down into the 30-minute and have a look at yesterday's high. We're not that far away. We're probably 100, 200 points from where we're currently trading up to the high. Again, yesterday from the overnight to yesterday's high in the DAX, we saw a range of 1,032 points. Massive move in the DAX yesterday. Normally we'd have 100, 200 points given pre all of this carnage. So you can see that's 10 times more at the moment for the volatility in the DAX, and there is some volatility around. Less so in the currencies. If you want a market that's got less volatility, more comfortable to trade, then the currencies are certainly a lot better at the moment for that, which is amazing really given the geopolitical situation that we have at the moment. But you can see there yesterday, I mean, apart from the odd bar, every bar in the 30-minute was to the upside. As we can see, oversold at the DP, got your retracement, and then you just getting small retracements. We drive through the 30-minute, so the 30-minute bar drives through the 200 MA, get my teeth in, and the market then continues that move to the upside, and when it blew out, it then just drifted lower. Like I say, watch yesterday's high if this market starts to move higher. If not, you've got the DP and the 50 EMA on the downside as well. Of course, you've got to take out the low that we've got drawn in here as well. But the market waiting for those CPI numbers, that's for sure. In the smaller time frame, if I can find the 5-minute, it's looking at me here. There it is. Yesterday, a quick look inside. We were oversold as we went into the futures opening, again down at the 200 MA. Divergence, crossover, market came up, we went overbought, market retraced. As you can see there, we know this is going to be a 78-89% retracement, and they sprang the market back up. Now on the open, we were at the 20 bar moving average, and it was choppy. There's no doubts about that. We had some choppiness, but once we got quiet and the market settled, we were then free to continue to the upside where the market did so, and then each pullback showed the market oversold and then made its way to the upside, where the market gapped higher here, and that was because there was the prospect of a ceasefire and talks, and it was just complete and utter nonsense. It just allowed them to move the market higher. We had the job openings as well. They came out at 11.5 million. So then after the news, the market continued to move to the upside. Again, it was all engineered and rigged that way. As I said in yesterday's morning market alert, there was a ceasefire at 7 a.m. Well, which way is it going to go? You know, whether it's true or not, it doesn't matter. You only have to put the news headline out there. We've seen that for the last 2 years. It doesn't matter whether it's true or not. It's a matter of whether people believe it or not. And overnight, we just had this move to the upside, close there. You can see that we've come back, got a retracement and perhaps a bit of weakness around at the moment. Back down to the 200 MA before the futures opens in about 10 minutes time. Quick look at the currencies, as we didn't look at them yesterday. JPY daily, you can see the market trading down to 78.89, bouncing off this yesterday as the March dollar contract comes to its expiration this week. That moving sharply to the downside, but the March contract moving to the upside. As I look on the other screen, I will be switching to that contract tomorrow because the March one drops off. We move to June. So yeah, we're getting a bit of a bounce there as the March contract for the dollar index rolls off, and in the 30-minute chart you can see there from yesterday morning, oversold in the pre-market, and again doing exactly the same. Once we broke out to the upside, it continued. Bit of a problem at the 200 MA, but continuing to move. So up 100 points to this point, and then 150 to the current high there, but struggling a bit. Again, waiting to see what happens at lunchtime, I suspect, because obviously if the CPI is up, the dollar will go up because interest rates will be going up next Wednesday. Not long to wait now to see when this will happen. In the 30-minute pound, again coming off an oversold situation at the previous day's close, and again as soon as we get to 7 a.m. the market moving sharply to the upside and holding at the moment. So we've got a bit of a rally in the pound, having come off the 130.74 130.78 level. And finally, a quick look at the metals, which were absolutely hammered. What a surprise. However, we got a bit of demand there. It needed to get this selling out of the way by JP Morgan, Bank of America, etc., to protect the 800 million ounces that BOA are short at the moment. So no surprise there. I'll be looking to add to this after the CPI numbers come out at lunchtime. I tried yesterday, and as soon as I got a few quid down, I thought, no, it's not going down. It's monkey hammer time. That's what's going on, especially when we were down at the 5-bar moving average. Normally you'd have a good chance to add a position, as you can see all of these other days, but no. They hammered the price on, or started on Tuesday. Wednesday they finished the job off, but it looks like there's a lot of demand coming into the market, which is good. So I'll be looking to try and add something into that one later today at the 1 p.m. fix, and then the 1:30 CPI numbers. You can see there in the 30 minute as well, we had a couple of 30 minutes where the market tried to hold, and then they just continued on until we got down to the $25 level. So we come all the way down from 27 on Tuesday all the way down to 25. $2 drop in silver when there's a war going on and we've got hyperinflation. You know, I don't need to tell you what that is. You can work that out for yourself. Gold the same. A huge supply in yesterday. They had to hammer it back below 2,000, and we're still currently below that at the moment. So we need to get back and hold above the $2,000 per ounce level so that we can keep this moving. But again, you see, keep it hammered down so it looks like there's not a problem with inflation despite the war, etc. US dollar yesterday down, so you know the dollar was down and everything else has been hammered down as well. Doesn't make any sense, does it? But that's the way it is. You only need a sniff of positive news to hammer the metals. That's all you need, just a smidgen of positivity, and that's it. In crude also hammered down yesterday, but we know it's temporary. We're going to $150, $200 a barrel with crude. And that's it. That will do it for this one. So let's see what the CPI numbers are today. And with that, as ever, thanks for watching. See you in the next one.